The world is confused and frightened. Infections are on the rise around the earth, even in countries that once thought they had contained the virus. The outlook next year is at best uncertain. Unemployment numbers, distribution concerns, and global economic meltdown fears are on the rise. Despite all of this, however, the US stock market continues to defy gravity. Earlier in the year, from February 20th, 2020 to the 7th of April, the market experienced the most devastating and fastest crash in global finance history.
Trading today, right now, the Dow is settling down somewhere in the down 2,300 range, ending a grim day on Wall Street.
In total, the Dow Jones Industrial Average fell over 30% from its peak numbers, shocking millions of investors. But what happened afterwards was to many even more shocking. At the making of this video, the Dow Jones Industrial Average sits at a record high just 9 months after suffering its largest dip in history. In today's video, we examine what this means and look into the mind of Warren Buffett as a way to visualize the future. Why didn't Buffett invest or deploy his massive cash reserve during this downfall and subsequent historic market recovery? The answer may surprise you. If you've followed Warren Buffett over the years, one thing you will immediately recognize is that he never exposes too many details. Instead, he dances around certain specific issues using arbitrary investing philosophies that give you a clue about the details without ever exposing the real truth. Here is one example. Back in May 2020, during his annual meeting, he's asked about the ongoing health crisis and how it could affect the economy. Here's a quick sample of his 8-minute answer. And let me give you a clue. It's basically a bunch of nothing.
Know the answer to most of the questions reasonably soon, but we may not know the answers to some very important questions for many years. So it still has this enormous range of possibilities.
Now, for a man who runs one of the largest companies in the world, we would have to be incredibly stupid to think that he doesn't have a specific opinion or projection on where this thing might go. For an example, not too long after this meeting, Buffett sold nearly all of his airline holdings based on the fact that he doesn't see a bright future for the industry in the coming years, potentially decades. Just think about that decision for a second and relate it back to his original opinion about the crises. In boardroom meetings in Omaha, I am 110% sure that Buffett has a relatively strong opinion about the future. While he may not mention them publicly, outright, we can dig up some of his opinions in interview clips and get a good idea on what he really thinks. Here's number 1, but before I show you the clip, I want you to understand something. His company, Berkshire Hathaway, is sitting on a pile of cash that's grown to $140 billion, with more flowing in every single day. Sure, he's made some small purchases, but in what is undoubtedly the worst market downturn in recent history, why in the world would he choose to sit idle when during the last crash his company was snatching up deals left and right? We know very well that Warren has stated multiple times that stocks are ridiculously cheap if interest rates stay at current levels. This is all perfectly summarized in a long 2-hour interview with CNBC featuring Charlie Munger and Bill Gates back in May of 2020. Becky Quick, the CNBC anchor, does an excellent job probing them in a way to expose their real thoughts. And while the slow ramblings of a 96-year-old man such as Charlie Munger may put you to sleep, just remember the clips I'm about to show you are undoubtedly going to go down in history, in my opinion. I have broken down the film to summarize the grand theme. It all starts with Bill Gates. Becky asks him about his outlook on equities, and just look at that smirk. Pay attention to the body language, and please read between the lines of his answer.
And Bill, again, I've spoken with Warren and Charlie earlier about this a little bit. So how about your take? When you hear that the Federal Reserve is probably not going to be raising interest rates anytime soon, how does that change your outlook on equities, or equities versus treasuries?
Well, the interest rate is like gravity, and all these valuations are dramatically affected by it. We still, if you look forward, are at these very high valuation levels. And so it's hard to see that the market will be gaining a lot over the next few years. I think people should have fairly modest expectations on what their portfolios will make in the years in front of us.
Okay, Bill is essentially saying that the markets will have a hard time keeping up, especially given the already outrageous evaluations and low interest rates, essentially hinting at a downturn in the equity markets. Becky pushes back with him with a great question to challenge this belief, and Bill essentially answers without really answering.
Have you changed your positions in your own portfolio as a result of this? Have you done any major?
No, it's a very equity-oriented portfolio. You know, it's a bullish portfolio that the American economy over time will do well. You know, fortunately, even if we have a few years here where markets are doing that well, you know, we've been lucky. We have a cushion. The foundation continue to spend generously.
Lots of ums and thinking. Gates is being very careful about this long-term economic outlook, probably because his words can shake the markets and create headlines, without a doubt. But you can get a sense of what he's trying to display without being too dramatic. Next, Becky asks Charlie, who is without a doubt the most honest and outspoken of the bunch.
Charlie, do you think that?
Well, sure. I think that if you drive interest rates down to zero and all the countries print money like crazy, it's lifted the asset boat for everybody. And I think it really is. So they didn't have anything else to do in the great.
At 96 years old, this man does not give a single. Just look at this answer and wait for the end. I wish they had a camera pointing at Bill because you can tell he reacts to his words with a shoulder shrug, but I would have loved to see his face. Charlie's next words are essentially the most important. His warning to money printing.
And I think it really is. So they didn't have anything else to do in the Great Recession. And so they took the only weapon they had and used it aggressively. I don't think we should quarrel with that. It did cause the people who were already rich to get richer. But that wasn't done on purpose or anything like that. And I think that will correct automatically.
Do you think we should still be using that weapon aggressively, which is what President Trump would like to see happen? He wants them to cut interest rates again, I think he said by 1%, and also push up quantitative easing once again. Build up the balance sheet.
So afraid of a democracy getting the idea that you can just print money to solve all problems. And eventually I know that will fail.
Next is the man himself. Buffett's words are equally as important, raising doubts regarding this new form of economics, a world where money doesn't mean a thing, and printing is as easy as telling your Fed chair to click a button.
Yeah, I probably could not have conceived of a world as recently as 10 years ago. I would not have conceived of a world where you would have full employment, 5% budget deficits, with actually the probability of those rising from that level, and at the same time have the long bond at 3%. I would have said that couldn't happen. And then people now, you have this modern monetary theory, which there's no question you should borrow. Any country should borrow money in its own currency. I mean, that is not like it's some great discovery or something that's been announced, but
No, it can be overdone.
yeah, and that's the point. I mean, that hasn't solved anything. Just to say, well, it's much safer to borrow money in your own currency, but the convergence of these factors would have seemed impossible to me, and generally, if I feel something is impossible, it's going to change over time. I don't know in what way, but I don't think we can continue to have these variables in this relationship. Now, if we can, then stocks are ridiculously cheap.
Now, if that final sentence is true, we know where Warren and Berkshire and likely all the elite billionaires stand on this world's economy, one built by insane money printing. They believe strongly it's coming to an end soon. Now, what soon means isn't defined, but according to Warren, the fact that it survived this long is very, very surprising. The final sentence is the hook. While Charlie and Warren rarely give strong predictions, you can tell they're waiting on an unknown event to bring this system of money printing down. When asked what this event may be, they have always maintained a neutral stance, saying they do not know, nor does anybody else.
The one thing I will say, though, is this is a conversation I feel like we've had for at least 4 or 5 years.
Right.
Where you're watching and continuing to wait for these interest rates, the yields to rise. We're still sitting at 2.5% on the 10-year, which is shocking.
Yeah, and we're sitting with very, very little inflation with a Federal Reserve that put a target for 2% on it not that long ago. And it looks like nirvana. It looks like we found the promised land where we just essentially money doesn't cost anything, and you can print lots of money and have full employment and no inflation. And I would have thought that something would have happened before now. I don't know what would have happened, but I wouldn't think you could have these things at these levels, the long-term rates, inflation rates, budget deficits, and have that be a stable situation for a long period of time. And I still believe that, but so far I'm wrong.
So in the meantime, you haven't really changed how you...
I think stocks are ridiculously cheap compared, if you believe that you're going to have the 3% interest, 30-year bonds makes sense.
That's a
We know from history what money printing usually brings and the consequences that follow. With a growing stockpile of cash, I believe that all the signs are there that Berkshire is preparing for an apocalyptic type event in the markets where you could see a downturn of 80+%. Now, this is not to say that Warren and Charlie are predicting a downfall of America, but rather a crazy crash potentially similar to the one we saw in 2007 or 1929. When it will happen, they don't know, but I believe they're preparing for this type of event that's going to happen in the next 10 years. If you think otherwise, I would love to hear your opinion down below. Drop a comment on what you think will happen long term with the economy, given the amount of money printing that is happening all around the world. Thank you guys for watching, and as always, please don't forget to hit that subscribe button if you enjoyed.